Welcome to the Institute and Faculty of Actuaries webinar on the latest CMI S3 mortality tables. We're really pleased that you can join us here today and look forward to an interesting discussion on the mortality tables. And I'm pleased that I've got my resident experts here with me who'll be able to answer any questions. Just wanted to welcome you. My name is Leah Evans and I am the Deputy Chair of the Institute and Faculties Pensions Board, and I also sit on the CMI Executive Committee. In my day job, I'm Head of Longevity Analytics at Mercer and consult to corporate and trustee clients on DB pensions risk management. Here with me today, I've got Matt Fletcher, who is the chair of the CMI SAPS committee, and that's a position that he's held since 2017. But he has a long-standing history and has previously been a member of both the Projections Committee and the Graduation and Modelling Working Party. In his day job, Matt's a senior consultant at Aon with almost 20 years in experience in the pensions industry, and he advises pension schemes, insurers and reinsurers on longevity and mortality issues. To my left here is Cobus Daniel, who is also a member of the SAPS Committee and the Mortality Projections Committee. Cobus is a consulting actuary at Willis Towers Watson with over 12 years of experience, and he advises trustees and corporates on a range of defined benefit issues, as well as holding a specialist mortality role, providing guidance and leading the Willis Towers Watson's postcode mortality modelling team. We've run a little poll while you are all waiting for us to start, and I'm pleased to see that we've got a range of experience joining us today, predominantly experienced actuaries, some students and a few newly qualified actuaries, and to anyone who is brand newly qualified and celebrated positive exam results last night, congratulations, and we're very pleased that you've still taken the time to join us today. Now, given the audience, you're probably all familiar with the CMI and its work, but here's a quick overview. And essentially, the CMI's mission is to produce high-quality, impartial advice, analysis, standard tables and models for mortality and morbidity for long-term insurance products and pension scheme liabilities on behalf of subscribers, and in doing so to further actuarial understanding. I'd like to point out that the work that the CMI does is supported by volunteers who take on roles as committee members. That's usually in addition to their day jobs, working for different actuarial organisations. And the CMI committees are also supported by the Secretariat. Now, the SAPS committee that Matt and Cobus are members of, that focuses on the mortality experience of UK self-administered pension schemes, and they have put in the work to produce these recently released tables, which are the focus of today's webinar. So before we get into it, I would just like to take the opportunity on behalf of the CMI Executive Committee, but also on behalf of the wider actuarial community and pensions consultant to thank Matt and Cobus and the rest of the committee for the hard work and time that they've put into it, as well as the CMI Secretariat and supporting them for doing so. So on today's webinar, we will talk about the tables, what they mean, how they've been developed. And the running order for today is that Matt will give an introduction to the tables and an overview of the data set, and then Cobus will run through some of the details of the analysis and methodology, and then Matt will also run through some of the results and the additional analysis that was carried out as a result of the consultation that some of you may have responded to. We have set aside some time for questions at the end, but please feel free to ask questions throughout. We might pick them up during the webinar or else at the end. And if we run out of time, then feel free to contact us separately afterwards. We would very much like this to be interactive to the extent that a webinar can, so please do ask questions. And below the video feed, you should see the web interface where you can submit those comments and questions. There'll also be a chance to vote in the polls, which you've already had a chance to experience. So we'll display the results of those polls when the poll has closed. It's not compulsory to vote, but we do appreciate your input. And to see that, again, just make sure that you aren't viewing the webinar in the full screen mode. And then finally, the video afterwards will be posted on the CMI, on the Institute and Faculty's website. And also the webinar is eligible for CPD if you feel that you've had an appropriate learning outcome. So with that, and with the pressure of providing an appropriate learning outcome, I'll hand over to Matt to give us an overview of the tables.
Thanks, Leah. As the number suggests, S3 is the third set of tables created by the SAPS committee. It updates the S2 tables that were released in 2014. Our overall aim with S3 is to create a set of tables, a suitable set of tables reflecting the spread of mortality rates that we see in UK pension schemes and to provide a common currency for actuaries to use and to understand. So the final S3 set of tables were issued on 5th of December. The key features that we've listed here, and each of which we'll go through in a little more detail later on. There are new very light tables and male dependence tables. There are some changes to the composition of the data set compared to the S2 tables. We've reviewed the amount bands and we've made some changes to the methodology. We had a consultation back in June that ran over the summer. There were 15 questions in total. In general, there were positive responses to the consultation questions. And there's more detail as to what we've been doing in the CMI working papers, both 113, which sets out the final tables, and 107, which introduced the draft tables and the consultation. So we'll go through some key consultation points. Most of the consultation questions proved relatively uncontroversial. We'll give some more detail on these 5 particular areas. So there was a question about additional S3 tables and as to whether people felt that the suite of tables that we produced were sufficient. There was a question in there about whether the proposed amount bands were sensible. There was one about how we adjusted the tables to a common effective date. There were a number of questions about extension methods to younger and older ages, and then one area of particular interest was that we have more public sector data than we had in the past. So a question as to whether we should produce a single table reflecting combined experience, or whether we should split into public and private sector tables. So I'll start looking at the data and the suite of tables that we've produced. As Leah mentioned, we have mortality data within the SAPS dataset from defined benefit pension schemes. These are gathered by actuarial consultancies, submitted to the CMI, and then analysed by the CMI Secretariat on behalf of the SAPS committee. Typically, it's schemes with over 500 pensioners. There are some differences. The PPF submit data for each of their schemes, so some of those are less than 500 members, but in general it's the larger pension schemes that we gather data for. We have data for 452 pension schemes in total, and the charts set out what's happened between the 3 different iterations of the table, S1 up to S3, and hopefully you can see from the charts that on any metric, whether it be the number of lives, the total exposure by pension, weighted by pension amount, or average pension, we have a bigger data set than S2. There's a particularly large increase for females, so we had less than 10 million lives in S2, and that's gone to over 13 million lives in S3. In some ways that's a very good thing, because the more data we have, the better hopefully the analysis that we're able to do. But one major part of the increase was that we got a lot more public sector data in S3 than S2, and we found that experience was quite different for the public sector schemes that we had compared to the private sector schemes that we had. So we'll come back to this later, but that does cause a potential issue when doing the graduations. Looking at the range of tables that we had in S2, there were 18 tables in total. If you look down the rows, you can see that we split by type of pensioner, so pensioners, normal health pensioners, ill health pensioners, and dependents. And then we had lives tables and various different amounts bands. Moving across to the S3 tables, we've got the same structure, but we have significantly more tables, and that's reflective of the fact that we have more data than we had previously, and also some questions about whether we could produce mortality tables that reflected people with very high pension amounts. So the key differences that we have here are we've added a suite of very light tables for people with the highest pension amounts. We've added male dependence tables because we now have sufficient data to graduate tables to do that, and then we've filled in some of the gaps, particularly on the female tables. We have more middle band tables and some more light band tables for females.
Great, and I think it's now time for our next poll. So we are keen to hear from you what you think you will use most of the new tables. You should have the poll answers in front of you now. Some of you might be really keen and use all of them. Some might have just been waiting for male dependent tables or the very light tables, and some of you might, of course, say your needs were already covered by the old ones. Matt, which ones do you think you'll use the most?
So I think the male dependence is a useful addition in the sense that we didn't previously have those. I think it's sensible to have those if we have the data available. Equally, I think the very light tables, although I think they'll only be used in relatively limited circumstances, I think, again, to have those, because we'll see in Cobus's presentation that there is a material difference in mortality between people with the highest pensions and the sort of just reasonably high pensions. So I think, yeah, I would obviously biased, but I would go for all of them. But I think there's definitely good reasons why we would have all of these different tables.
And I guess it's fair to say that the reason we didn't have them before was just because we didn't have sufficient data. It's not that we've now suddenly thought we need some new tables. We would have had them before if we'd been able to.
Broadly speaking, yes. I think so. The male dependence, certainly that's the case, and also the female, the lighter tables again is the case. I think the very light was specifically people were asking for these tables, and we've responded to those requests on the basis that we are able to produce something that is credible.
Yeah, okay. And I guess on that point, I think this was one of the consultation questions, wasn't it, whether any additional tables should be published?
Absolutely.
What was
So we did have some responses asking for different tables. I've just moved on to the slide now. There were requests for additional lives weighted tables. So at the moment we've only done sort of all lives tables, but none of the tables had major support. So we had sort of one response for each of them, and looking at each of them, we felt that none of them were likely to have sort of very wide use and were going to be different enough from the tables that were already published to warrant publishing. You know, we already have now 30 tables compared to the 18 that we had before. So the decision was made that the range that there was enough support for the range of tables that we'd already had to just leave it as it was. There was one request to change the very light tables. We suggested a V as the syntax, where a couple of people suggested that VL might be more sensible in case we wanted a very heavy table, and how would we come to
that makes sense.
that? So we have implemented that change.
Yeah, good to see that consultation can come up with a very sensible and practical input. And so looking at the results of the poll, it's fairly even actually. Quite a few respondents, sort of almost a third, will use the very light table. 27% will use all of them. Very keen, good to see. 16% male dependence, 29% none. But I guess that is probably a reflection of the fact that, you know, the data and the tables that we had before are the ones that are most commonly used. So don't be disheartened by that. Great. Well, thank you for your participation. Cobus, I'd like to hand over to you now to talk a little bit more about some of the underlying method and yeah.
Thank you, Lara. I am going to talk about some of the underlying methodology, and particularly where we, with S3 tables, differed from S2 tables. So to start off, we are going to look at the amount bands. So with amount bands from S1 to S2 tables, what we did is we simply increased those boundaries by the rate of RPI inflation. Now that's fine and good. It allows pensioners that would be in one band in S1 table to generally fall into the same band in S2 tables. What it unfortunately doesn't do is it doesn't have regard to the underlying data and how mortality rates between those different bands may differ. So for S2 tables, or for S3 tables, we decided to go back to first principles. And we had four main objectives. So the first objective was just that we wanted the bands to reflect relatively homogeneous groups of experience. We wanted enough distinctiveness between those bands. And generally, we wanted the bands to broadly represent the same number of bands that we had in S2, and if we were lucky, broadly line up to the same experience that we had in S2. All of that isn't always possible, but we made a good effort of it, and I'll talk a bit about how we went about doing that. So I've put on a chart that shows on the horizontal axis different amount groups increasing towards the right-hand side. On the vertical axis, there it shows the actual number of deaths within that group as a ratio of the expected number of deaths calculated on an all pensioner table. And a very clear pattern emerges there. So for amounts of up to about £5,000, we see actually very little difference in experience. And then from there on, it gradually reduces as amounts increase. So the span of that is pretty wide. So we've got, for that heaviest band, mortality experience that's about 30% higher than the all or average amount. And right at the lightest end, for pension amounts over 100,000, we've got experience that's showing mortality rates that are about 40% lighter. So a massive range, 70% in total. So it does make sense to group those together. And on the slide, we've showed broadly how we've gone about doing that. So the first group is our heavy lives, everything up to about £5,000. Next group is our middle group. And the last circle there is our light group. And for very light, we didn't actually do another group on top. The light group is simply a subset of that, of the very light is simply a subset of the light group. We had to use a subset because we actually did need enough data in that very, very highest pension amounts to generate reliable tables. So moving on to the females, we've got a similar story. So for the females, mortality rates span a narrower band. Amounts don't have as big an impact as for the males, but we can still see three distinct groups there that we've highlighted. What we also can see on that slide, which we probably couldn't have seen on the previous one, is that we are actually showing those lines on a lives weighted and a amounts weighted basis. Now, on the previous slide, they fell right on top of each other. For the females, it's slightly different. They aren't top of each other, except for that very last group, which shows that the lives weighted point is slightly above the amounts weighted. And what that simply implies is that if we were to look at even higher bands, we would still expect to see that slope continuing down. What we don't have at the moment is enough data to analyse that, so unfortunately we do have to cut it off. Hopefully in the future we'll get more female information and data at the higher bands, and we can look at that higher bands even more. So, taking it all together and just comparing the S2 versus S3 bands, and starting with the females this time, you can see that the boundary between the heavy and the middle tables is fairly consistent. It just worked out that way. The boundary between the middle and the light tables shifted up quite a bit, but the proportions in each of those groups of data, the experience data, is broadly equivalent. For males, we can see both boundaries, the one between heavy and middle and between middle and light, move up significantly. The proportion of lives in the light band is similar to S2, but the split between heavy and mid changed considerably. They're now much more evenly split. What you can also see there is the very light tables as a subset of that light band. So for males, it's approximately only 3% of the top lives. For females, 6%. So we are really looking at the top end of our amounts range. So we asked our users whether they agreed with our proposed amount bands. Most of them were very supportive of going back to first principles. They were happy with it. We did have some comments on the very light tables and whether they should sit on top of the light band rather than being a subset of that. Now, to my mind, the very light tables is quite a niche product. It's meant for those schemes, so your executive-only schemes or schemes of very light mortality, those that use a 90% multiplier or lower on a light table already. For other schemes that want to use it to segment their membership into different amount bands, we feel that the heavy, mid and light bands already does the job adequately for that. So we decided not to change it, but we did produce some additional analysis showing how a hypothetical table between your upper end of your middle band and your lower end of your very light band will look. And as you can see, it's about 5% heavier than the current life tables. So next I'm going to talk a bit about the methodology, other bits that we went through, and particularly where they differed from the S2 tables. And we are going to start just by looking at the, I'm going to pick one, and I'll start talking about the graduation ranges. So typically pensioners, we graduate over a range of 60 to 95, dependents over a range of 45 to 95. That's where we've got enough data. For some of those tables, at the fringes, we find that the data is less and we see some artifacts coming out that doesn't quite make sense. So for a couple of the tables, we did narrow those ranges slightly, maybe from 65 to 95 and so on. It's the same process that we followed with S2 tables. We did also do make some tweaks in order to produce sensible tables. Another aspect, and it's a top one there, is how we rebase our tables to the same date. So for S2, what we did is we graduated all the tables and we calculated the weighted exposure midpoints and then projected forward from that point onwards to 1 January 2007. Now, that is okay, but that methodology has some flaws which I won't go into here. For S3 tables, we did something a bit simpler and nicer. What we did is we weighted or projected the exposure data to a central point and then just graduated on that adjusted exposure data. So the midpoint for the S3 tables is 1 January 2013. So all projections should be applied from that date. So for that, if you that I don't know. what I would say is we choose 1 January. That's not necessarily our exposure midpoint, but it is a convenient date as it links in well with the projections that the projections committee provide. Other aspects that we looked at include looking at the formula that we use. So there was a graduation and working party, published working paper 77, which sets out quite nicely what things we could have looked at. Their conclusions, which we agreed with, were that the choice of graduation formula doesn't have that big of effect. Things like projections and adjustments subsequently made to the tables have a bigger effect. We agree with that. Basically, you are just drawing a smooth line through a set of data points. That's what graduation is. And what they also concluded is that if we can use a simple Gompert formula and that formula satisfy certain tests and is a suitable fit for the data, then we should stick with that simple formula, and that's exactly what we did. So we used Gompert formulas throughout, one more parameter on the females than the males. Next up is the extensions. Now, we extend both to lower ages, so for pensioners from age 20 to age 60, and for dependent from age 20 to 45, so it's just to your exposure or experience range that you fit. And we do the upper end too, so from 95 years upwards, so that the tables are complete up to 820. Now, lower age extensions we do mostly for convenience. We base all this on pensioner information. So the tables are meant for post-retirement assumptions. They are not really meant for pre-retirement assumptions, although we know many users do use it for that. And that is fine, because in many cases, those assumptions aren't that material. So we recognise there's a convenience factor in that, and that's why we do it. The method we use, just because of that sort of lack of materiality, is fairly simple to match. So basically we take the mortality rate for a general population age 20, and we just match it up with what the rates are at the bottom end of our fitted range. It's a bit more complex than that. We do use a formula. It's not just a straight line. Nobody sits there with a ruler and just draws a line. But that's basically what it is. That's similar to what we've done with S2. The only change is for S2 we did that from age 16. Well, now we do it from age 20. And that has a slight effect that we'll show a bit later. Upper age extensions, a bit more relevant because that actually does matter for post-retirement mortality. What we see in our data and many other data sources is that there is convergence at upper ages. That means that as soon as you get to very high ages, above 95, 100, amounts don't matter that much. We see very similar experience for different amounts, and we start seeing very similar experience between pensioners and the general population. So what we do is we slowly blend from a top end at a fixed rate, and that's an assumed rate. I think we use 15% in our S3 tables. From that, and it just merges and then slowly moves towards a parent table. So a parent table may mean that the light table may move to the all table, and then ultimately to the population. So that is what we've done on the upper age extensions. So now looking at the results, and that's always the interesting bit. Well, actually, we're quite pleased with that. So what we see is quite a nice spread of different tables. There's no sort of unexpected crossovers or anything, so the amounts follow a sensible pattern. They're quite distinct too, so between the heavy and medium and light, we see about a 2 years life expectancy difference from age 60, which is quite good. The very light adds up another year to that, round about. So overall, males look quite sensible, and as you would expect. You also see the very clear convergence at that older ages and younger ages, because we are going to population averages at that point. Females is a similar story, although the tables are a bit more complex. We use a slightly more complex formulas to fit the data. As we talked about before, the amounts effects for females is slightly less pronounced, so there we only see about a year life expectancy difference between heavy to medium and medium to light. So, first thing we're normally asked by users is, now, so how does your new tables compare to the old ones? And we are going to quickly show you first how they compare, and then have a bit of a chat about why they are different, and they are different. Sorry for the spoiler. Two charts on that table. The one on the left-hand side shows the ratio of S3 tables to S2 tables over the entire age range. Now, I wouldn't get too hung up about that and the spike at the start. That's mostly due to lower age extensions. The most useful chart is probably that one on the right-hand side that shows it over the age range that we fitted. So I'm going to focus on that. And as you can see, the S3 tables at higher ages, say 80 plus, it's very similar to the S2 tables rolled forward to that date, to the same date, to 1 January 2013. For lower ages, we are seeing lighter mortality in the pension data set, and there are various reasons for that, and that we'll get into. For females, it's a similar picture, although quite a bit more pronounced. So at those lower ages on the right-hand side, we do see quite a big difference between the S3 tables and the equivalent S2 rolled forward tables. And for rolled forward, we just use a CMI 2017. I think we're going to have a quick poll about the potential reasons why that could be the case.
Yes, that's right. Well, we can just move on to the next slide as well, which shows some of the reasons. But yeah, be interested to hear from you. We've spoken, well, Copus has spoken about most of these already now. Without having been involved in the calculation, what do you think might have caused the biggest differences? You've got the choices here, just the composition of the data set, the changes to the amount band limits, mortality improvements for pension scheme members relative to population, changes in formula or changes in graduation method. Yeah, and it's interesting, isn't it, Cobus, sort of comparing the one table to the next, and obviously, like you say, first question everyone is going to ask, first question I asked you guys today was, how do I move from one to the other?
Yeah, and unfortunately there is no simple answer to that question.
Thought that might be the case.
That's probably not what our audience want to hear. But generally, what we will say is that the underlying data set that we use does change over time. So where a specific scheme sits in that pack, unfortunately, will also change over time. So users need to be aware of that. They also need to be aware that over time, while they project tables forward with general population experience, pension and mortality improvements may differ over time. So they need to be aware of that. So the best thing to do is probably do a bit of a study, A over E experience analysis, or something like a postcode study that could inform that choice. Otherwise, I don't think there are many rules of thumbs that you could use, but we do produce industry-level information that could be useful. We do show experience for different amount bands, so you can sort of segment your population into different amount bands. That could be a way to do it. So there are options available.
Yeah, and I mean, I have to say, having read the paper and actually reviewed the paper, there is some really useful information in there. So I would encourage you all to read the paper as well as listen to the webinar, because it does show some additional analysis and charts which may be helpful in informing how you use the tables or discuss them with your clients. we've had some responses to our poll. So probably quite reassuringly, nobody has thought that the changes in formula or graduation methods have caused the main differences, and that's quite reassuring because that would seem a little bit arbitrary. Biggest vote winner here is the composition of the dataset, followed by mortality improvements for pension scheme members relative to the population. That's got about a third, and then changes to the amount band limits, which is about 20%. Cobus, I'm not sure how easy it is to actually say which has been with the biggest drivers. Do you have any?
I think our audience is quite knowledgeable. They are showing quite a keen understanding. So I would agree with that. So I would say composition played probably the biggest part, particularly for females, and I think Matthew will get into that a bit later. Yeah. Improvements certainly did play a part, and it always does. So I don't think we'll ever have a situation where pension and mortality improves just in line with, nicely in line with the general population. Amounts bands, yes, that will definitely have a difference for the amounts banded tables, of course, not so much on the allowance weighted and just the all amounts table. Yeah. And the other two, yeah, they would have very, very minor impacts on the differences. I don't expect them, to feature at all. So it's reassuring to see 0% voted for those. Yes,
and probably also reassuring for us all that we don't have to go through the difference in graduation methods with our clients. Well, great, thank you. That was really, really informative and helpful. Now, I think one of the topics that was commented on in the consultation was we did get some questions around changes in the data set and other consultation impact. So I think, Matt, you're going to just talk about some of that in a little bit more detail and add some colour.
Yep. Thanks again, Lan. So the consultation really flagged up two particular areas where respondents wanted us to provide a bit more information as to what was going on, and this was sort of relating to the makeup of the data set, really. So particularly the two things, public versus private sector and industry sector. So I'll spend a little bit of time on each of these. Firstly, in the public versus private sector. So it's worth pointing out at this stage that both the S1 and S2 tables did have a certain proportion of public sector data in the data sets behind those. But S3 does include a much higher proportion of public sector data than S1 and S2 did, both for men and women, but particularly for women. And the charts at the bottom of this slide sort of illustrate the proportions of data that are in each of the amount bands that relate to public and private sector data. On the left-hand side, we have males, and we can see here that the blue bars are broadly aligned across the pension amount bands. So for heavy, the lowest pension amounts, the heavy band, we have roughly 20% in public sector and 80% in private sector. And then if we go up the amount bands, it goes up, but only to 35% public sector versus 65-70% private sector data. So it's reasonably consistent across the males data set. For females, that's not the case. So we start off at the heavy amount bands with 60% private sector data and 40% public sector data, where if we go across to the very light band, so the women with pensions over 16,000, we find that actually more like 70% of that data set relates to public sector data. And as I mentioned at the top, on investigation, we did find that mortality experience in public sector schemes that we have in our data set is different to the experience that we had in private sector schemes that are on our data set. So it's definitely a question that was worth asking as to what do we do about this. And this was the question that was within the consultation document, and it's fair to say that this is one question where we did have views on both sides of the argument, and it is something that we discussed quite a lot within committee as well. So on the on the arguments for having the combined data set, which was our initial proposed approach, people pointed out that these differences may not reflect the whole population of public and private sector schemes. So our analysis can only reflect what we see within our data set, and clearly we don't have all public sector schemes in our data set, and equally we don't have all private sector schemes in our data set. Also, that other factors than private sector versus public sector may be a better indicator of mortality difference. So thinking about particularly things like pension amounts and also some measure of deprivation or a postcode sort of rating factor. People suggest that maybe the expectation might be raised that public sector tables should be used for all public sector schemes, or private sector tables should be used for all private sector schemes if we produced these separate tables, and the committee agreed that that wasn't automatically and necessarily an appropriate thing to do. And the final point on the combined side was that some tables may not be viable if you try and split them into public and private sector. In particular, the male dependence table, it wouldn't be possible to produce separate public versus private sector tables for that particular group. On the other side of the slide, people were asking whether with having more public sector data in S3 meant that the S3 tables weren't consistent with the S2 tables. And again, it's worth saying that the S2 tables and S3 tables, we do always have a difference in the makeup of the tables between different industry sectors, etc. It just happens that in this case we do have one particular sort of big difference that we can analyse. And also whether updating from the S2 table to the corresponding S3 table, so for example S2 PMA versus S3 PMA, does it make sense to just translate directly across from one to the other? And again, we in committee we agree that users should definitely carefully consider the choice of table when they're updating to S3. So we retained our approach in the end of publishing the combined tables, but we have published and carried out some additional analysis to hopefully help people consider what tables to use and what's the most appropriate approach when considering moving from S2 to S3. The first bit of analysis that we did was to look at the scaling factors that we might use for private sector data relative to S3 tables. So essentially what these numbers are saying is these are what you would apply to your base table if you felt that the best set of mortality rates to use for your scheme was 100% of a private sector table, so private sector only table. Now that's not quite the same as a direct translation back across to S2, because of course S2 did have some public sector data in it as well. And you can see that the experience for private sector schemes compared to the overall tables is somewhat higher. So the mortality rates typically for the private sector schemes within our data set are heavier than the mortality experience for the public sector schemes, again within our data set. For males, the difference is relatively small. We've got a couple of percent loading on the rates. For females, the numbers are much higher, so sort of around about 10% for the female pensioner amounts tables. And that's a function of the fact that, as we saw earlier, that the higher pension amount bands are dominated by the public sector experience, where the lower amount bands aren't. And then as we're amounts weighting within the PFA table, we do see that the multipliers are that much higher. So we did do an analysis against the mid-band table, which obviously is less dominated by the public sector data. And from that, we can see that the mid-band table gives us much closer to 100%, because you've knocked out those people that are mainly public sector with much higher pensions. So our thought within the committee is that when people are looking at sort of translating tables across to each other, it may be that the mid-band table is a better one to use for a private sector scheme, a sort of typical, whatever typical means, but a typical private sector scheme, it might be better to start from the females mid-table rather than the females all-table.
Okay. And we've had one question actually on the public and private sector data mix, and this might be an unfair question because it's sort of asking you to predict what might happen in the future, but do you have any views on how that mix might change? Is there an expectation that we'll get more public sector data in, you know, the sort of S4 iteration of tables, whenever that is?
Yeah, so there are various sort of obviously moving parts to it, but I think given that public sector schemes are more likely to be open to new accrual currently, and we do see obviously the trend towards closing of private sector schemes. So if we assume that things carry on as they are, potentially the proportion within public sector might increase somewhat over time. Having said that, it sort of obviously depends on exactly what data we're able to gather from the public and the private sector. So who knows what's going to happen in 5 years' time. But yeah, I think it'll gradually, you might expect it to increase. I'm not sure that it would be a huge sort of step change in future.
Okay. And I suppose to the extent that it does increase, provided the data set is large enough, you would then have a look at the private versus public separate tables again, and you might reach a different conclusion in future. Okay, thank you.
Okay. The second thing that was requested was an industry sector analysis. There's more to come in 2019 on this. We will do a paper doing full set of industry analysis, but this is something that we looked at, essentially comparing S2 with S3, the different proportions in the particular industries. These two charts show by how much the proportions of the data within different industries have changed between S3 and S2. And if we focus on the yellow bars, really, which are the proportion by pension amount, you can see on the left-hand side for males, no category has increased or decreased by more than 10%. So industrials has decreased by the most, by sort of close to 10%, and public sector has increased by the most, and by the amounts bands, it's by close to 10%. On the female side, there are bigger differences. In particular, we have, as trailed a couple of times, there's a lot more public sector data, and that is to some extent offset by less local authority data. And that's really a function of what has been submitted for S3 compared to S2. So as I say, we do always see some changes in the composition between different iterations of the data set. And the other thing that we looked at was what mortality experience was like with different industries, because I think we mentioned that within the consultation paper that different industries have different levels of experience, and that actually the differences were potentially greater for some industries than between public and private sector. So we see again on the left-hand side, the male pensioners. This is actual versus expected mortality for different industry sectors compared to the overall table. And as I guess you might expect, financial services schemes have much lighter mortality than a number of other schemes, where industrials, basic materials, consumer goods are significantly higher. We do see that public sector schemes have lighter mortality. And on the females side, again, we have financials is actually the lightest mortality, but financial services, other public sector is also lighter than the 100%, where again the heaviest mortality is the industrial sector for the females as well. It's worth pointing out that each of these dots represent multiple schemes, so none of these are single schemes. That doesn't necessarily reflect the full range of variation within industries, and that's something that we're intending to have a look at when we come to do the industry analysis paper in 2019. So in summary, we've released the final S3 series of tables. The majority of the feedback to the 15 questions were supportive of our approach. There were questions on either side. We didn't change any of the table rates compared to the S3 series, but we did produce some additional analysis to hopefully help people to understand what we're doing and to help them use the different tables. We've got 12 new tables compared to S2, including these new very light and male dependence tables. As Cobus mentioned, we've made some changes in method. So the graduation formulae are simpler and more consistent than they were in S2. We've got a new method for high age and low age extensions. And we also have some significant changes in the composition of the SAPS data set between S2 and S3. And what's next? What are we planning as a SAPS committee in future? So as I mentioned, we're intending to do an industry analysis paper, hopefully early next year. We're doing an experience analysis of the latest data set that we have, which is 2010 to 2017, so adding an additional year to what we've got in this paper, and that will be released early next year. And the final point is that we are now starting to collect data for index of multiple deprivation, so essentially something that's based on people's location and the deprivation of those sort of geographical areas. If we get enough data on that, we plan to analyse mortality experience by socioeconomic class, and hopefully that should give an even better, going back to the start, we want to produce a nice spread of tables for people to use. This should hopefully do an even better spread of tables. So we've released a new CMI index multiple deprivation tool just recently. It's available on the CMI website for download. So please, if you can, include index of multiple deprivation with future submissions. The CMI tool should be relatively straightforward to use. That's the intention, and hopefully should help people that are using it to come up with some additional insights on their data as well.
Thank you. That's really interesting, and that brings us to the end of the main section of the webinar. But we do have some time for questions, so please feel free to continue to submit questions. We've had a few in already, and yeah, you can just submit questions through the panel. Few easy ones, I hope, just to start us off, perhaps. First one, I think you probably covered that earlier when we were talking about the different tables on the consultation, but just a question here on why there are no normal and ill health lives table.
Yes, I think our feeling there was that whilst we could produce these lives tables, it may be possible. It was unlikely that people, the majority of people, were going to use those tables, and given that we'd published 30 tables already, we felt that there wasn't any sort of major appetite for people to have more ill health lives tables or normal health lives tables.
Yeah.
The data that we receive is also becoming less distinct in that aspect. So less contributors are splitting their members by normal and ill health. So
Okay.
if we publish it, we're not certain how long we'll be able to still do it into the future.
Oh, okay. Fine. So is that something that actually people should be doing more of when they submit data?
Different schemes will make different choices based on their data protection policies.
Okay.
But it's something as in the working papers we always ask people to split them wherever possible, because obviously the better the split of the data that we have, the better the tables that we can produce. But as Cobus said, it's not always possible.
Okay. And here's another one which I suspect the answer will be yes, one for you, Cobus, maybe. Were statistical tests of significance used for the difference between public and private schemes?
So we looked at a range of goodness of fit tests for the tables. It was quite clear from the test that there were significant differences between public and private sector data. So to answer that question, probably yes, we looked at a test, and yes, they were different and statistically significantly so, even at the same amount of bands, within the same amount of bands.
Yeah, I mean, it's worth saying that you would, I suspect you would find the same for any sort of distinct subgroup of the population. For example, if you took the financial services sector data out, you would find significant differences between those. It so happens that this is a bigger data set and a sort of more obvious place to split. But you do see these differences sort of on various different subgroups if you split them apart.
Okay. And perhaps another one for you, Cobus. There's a question here. What is the implication of S3 for the long-term rate of mortality improvement projections, which perhaps fits more into your role on the projections committee?
So the subcommittee, we look at base mortality rates rather than at future projections. So that is the job of the mortality projections committee. So I wouldn't say that these rates or things that we've published have any real impact or tell us anything about longer term rates. For longer term rates, we need to think about what happens to the population of overall, and maybe look at what we expect to happen to medical data, treatments, all of that. It's a different process, and it's quite a niche process, and not something with a very clear answer, unfortunately.
Okay. Again, one that's based on the data that you get, but does SAPS have any information on the regional differences in mortality? That's obviously always a hot topic in the newspapers.
Yeah, so at the moment we don't gather any information on location, but as mentioned, we are intending to start gathering data on index for multiple deprivation, and that is geographically based. So in addition to being able hopefully to produce something on different socioeconomic groups, we should be able, certainly on a country by country basis, to produce some analysis, assuming that we get that. Assuming that we start to get that data from people, we should be able to have that. But yeah, at the moment we don't have the data that will allow us to do that.
Okay, fine. So yeah, better the data you submit, better the tables you get. One question here on the amounts bands, Cobus, and obviously for male pensioners, you've shifted the amounts bands to cover a greater range in the heavy tables. To the extent that perhaps people don't have long careers with one employer and move between schemes more and end up having smaller amounts, does that affect, how is that taken account in the way that you assess the amount bands or the splits?
So currently, amount bands still show that it is quite indicative of mortality experience. Now, in the future, with people working shorter times in one company, we may see that very nice link change a bit. So that's one of the reasons why we want to start gathering this postcode and IMD type data, so that we have another rating factor that we can look at and can potentially replace it. Currently, as things stand, amounts are probably still the most predictive factor that we can look at for mortality.
Okay, great. Well, we are pretty much out of time. Before we sign off, here's just a quick reminder of, information, key resources on the website. Working papers are published there, and lots of really interesting information on there, as well as contact details. So if you do have any questions, then please do feel free to get in touch with the CMI at the address listed. And then all that's left to say really for me is thank you again to Matt and to Cobus for joining us today and providing your insights. Thank you all for joining us, taking the time to listen, and also for participating in the polls and providing your questions. We really appreciate it. And please do let us know if you've got any other questions. And I'm sure we'll talk again about mortality table soon. So thank you and goodbye.